Uh, Power to SME, we established in year 2012. Our founder and CEO is Mr. R. Narayan. He came up with a very innovative business model which eliminated the intermediaries in the supply chain of commonly used raw material from the big manufacturers to the MSME manufacturers. And he did that on the demand aggregation model, and thus we were able to provide better pricing to the MSME manufacturer for the procurement of these raw materials. This is the power to SME ecosystem. Over the last 10 years, we have been trying to develop a robust ecosystem for manufacturing MSMEs to provide all the solutions around the manufacturing activity under one roof. Power to SME is our parent brand, which deals in raw material procurement and sourcing solutions. Our brand SME Shops, it is the B2B portal which deals in maintenance, repair, operation, and industrial consumable goods. We have our own NBFC by the brand name BizFunds, which offer very innovative contemporary financial solutions in raw material purchase financing area. And we have our brand Finance Me, which connects MSMEs with the empaneled financial institutions for the seamless approval of working capital loans. The key product categories that we deal in includes steel, polymer, paints, yarn, chemicals, and there are many more. The major industrial sectors that we cater to include auto components, infrastructure, plastics, electronics, and there are several others. Power to SME, we have been trying to establish ourselves as a one-stop shop for all the needs of the manufacturing MSME, right from their raw material requirement to the purchase financing needs to the working capital to industrial consumable. So we offer a range of services in this domain. We are an invested company. Some of the most reputed venture funds in the country have invested in us. Inventors, Kalari, Excel. Nandan Nilekani is one of our strategic investors. We are also funded by World Bank through its financial arm, International Finance Corporation. These are the few awards and accolades that we have won since our inception. And this is our social media presence. Any one of you wanted to know more about our services, get in touch with us through any of this medium. We have Dr. Sinha and Mr. Akash Jain. They will be giving you a brief idea about what services they have been offering under their through their organization. And if any participant has any query or question to be raised to the speaker, kindly submit these questions in the chat box. We will be taking these questions to our session chair, Dr. Kumar, in the Q&A session. And with these words, I would like to hand over the session to Dr. Kumar to carry the discussion forward. Over to you, Dr. Kumar.
Thank you, Zumair. Thank you very much. It's a very interesting session. In fact, we have been thinking of organizing this kind of session for quite some time, and I'm happy that we have two experts, in fact, to talk about various issues, the options, as you mentioned, new financial approaches for meeting MSME credit gap. And in that subject, we will discuss various options and what kind of new approaches that the MSMEs adopt in the current circumstances, which can really bridge some kind of, some way or the other, the credit gap which has been existing for a long time. In fact, I go back to the study of International Finance Corporation of World Bank, whereby they had mentioned that there is an existing credit gap of 30 lakh crore. This was done probably 6 years back. But over a period of time, I am not sure whether this credit gap has actually reduced, because with the kind of growth that has taken place in the MSME sector, I don't think the credit has grown to that extent, except that during the last 2 years, the emergency credit line guarantee scheme of 5 lakh crore, which the government announced, in fact, gave some kind of fillip and reduced the gap, and the credit flow substantially increased. When I say substantially, it increased by about almost 20%. by the utilization of that emergency credit line guarantee scheme, GLS, as we know. But if you see overall in the country, we know that MSMEs particularly, and even other sectors also, have been struggling to get adequate credit with the terms which they can afford and the cost which they can provide. Now, it is not that the banks or the financing institutions in India are not capable or they don't have resources. But the question is, there is a mismatch between the demand and the supply. While banks are willing, the financing institutions are willing, there are plenty of NBFCs and other new entities which have come up, fintech companies. They are all, in fact, looking for providing finance. Their business is basically lending. And on the other, there is a huge demand from the MSME sector. We know that the sector is starving for funds for a long time. It's only, as per report of the RBI, probably 14% only. 14% of the total enterprises, MSME enterprises, have access to formal credit. And it's only 16% of total lending of the banks that the 16% has gone to MSME sector. So this huge gap exists. And the reality is there is a demand from one side and there is a supply side which is willing to finance. And even then the gap continues. Now, this is the main problem. And how do we reduce this gap? What are the new approaches? What are the new instruments? What are the new mechanism and ways, in fact, through which we can really bridge this gap? So we are going to discuss these things in our deliberations, in the coming 1 hour. We have, in fact, two very experienced persons. One is a banker, of course, Dr. Rajendra Kumar Sinha, who has been associated with the banking and finance sector for a long time. I was reading his profile. I will briefly mention when I introduce him and bring him to speak. And with a lot of experience, of course, Dr. Sinha, welcome. And then we have Mr. Akash Jain, who is a director of Care Ratings. And as we know that the ratings and gradings basically are helpful for borrowers, particularly, to improve their credit discipline and receive the credit flow in a better way. So we'll bring these two experts, in fact, to speak about the subject and tell us as to how this gap can be reduced, what kind of new approaches and tools can be applied. But before that, let me give my own inputs, in fact, briefly. In fact, while the traditional lending in past has been basically collateral based, the new kind of lending, the new approaches incorporate now viability based lending, basically viability based and cash flow based lending. So when I say viability based lending, the performance of the enterprise, the quality of the enterprise, the background of the entrepreneurs, promoters, and the potential of success of the enterprise becomes very relevant and very important for the financing institutions. But at the same time, the requirement of collaterals and securities have not been dispensed with, they continue. So, but to a greater extent, the performance and credibility of the venture and viability of the enterprise, the feasibility of success of the enterprise are also now very important. And that is how the ratings play a very big role, because they help in identifying these issues as to whether the project is viable, whether the promoters are capable of running their enterprise successfully, and whether the repayment capacity and repayment potential of the enterprise is good or not so good. So that is one way. And the second is the new instruments which have come in for cash flow based financing and bills discounting and factoring. We take the example of TREDS, which has been introduced a few years back, and it has been growing very successfully with new kinds of financing options coming over the trades platform. Although I would say that the trades uh, is still in the nascent stage, because very few enterprises and corporates have registered, because they have their own registration requirements and eligibility requirements for empaneling the corporates as well as the MSMEs. But I would say it's a step in the right direction, and it has been growing. The culture of, in fact, receivables financing and factoring has been introduced by the introduction of Trades platform, and over a period of time, it has really earned a name, good name. So the question is, how do we, in fact, bring in more models of financing on the Trades platform? I understand that they are not only, continuing, or the existing model of continuing the financing of bills and receivables, but they are also bringing in new models of financing the MSMEs suppliers directly, instead of the bills being involved, or the the credibility of the buyers being involved. So I would say that new instruments through the trades would be surely helpful, but the gap is gigantic. In fact, it's a huge gap. 30 lakh crore is a big gap. And as of date, it's not even 20 lakh crore, which is the existing total financing to the entire sector. So we have to see, in fact, do some major changes, do some major overhauling, in fact, in the entire process. I understand, we know that a few years back that 59-minute loan scheme was introduced. While it was a good step, the initiative taken by the government was in the right direction, with a good purpose and the intention. But ultimately, what happens is that the banks do not want to leave their, you know, the um, the mindset of traditional mindset of securing their interests. So when you say 59-minute loan scheme, um, I don't think it is practically possible for the bankers, in fact, to just provide any credit amount up to 1 crore just based on a letter or certificate issued by that 59-minute operator. So they have to undergo their own, they have to take their own time in processing the proposals, and then take a decision on that. And not all the proposals approved by 59-minute loan schemes have been sanctioned by the banks. So while we take one step forward, we go back two steps, in fact. Similarly, credit guarantee scheme has been introduced by the government of India for financing collateral-free credit of 2 crores. So there are various, people who have been from various sides complaining that the banks do not encourage that kind of financing without collateral up to 2 crores. While we have been promoting that scheme, the government also has been very fervently promoting, and the banks also talk very favorably about it. But when you go to seek a loan from the bank, they are always, uh, they are always, uh, prefer to have some kind of collateral and securities. So it's very difficult to, in fact, apply for that collateral free credit and apply that credit guarantee from the government. So these are some of the factors which I thought, let me just give in the introduction to build the context as to where do we stand and what we are talking of, and how do we cross over this stage? Because as I said, the gap is very big, and the limitations we know, the bank's mindset we know, the need of the MSME sector when we say we want to achieve 5 trillion economy by another 2-3 years, and the MSME sector has to double their production, manufacturing and services from the existing 0.8 trillion to close to 2 trillion to achieve 40% of the GDP, new GDP that we are targeted GDP of 5 trillion. So naturally, we have to accordingly increase the credit flow also. Our subject of discussion is credit flow today, but otherwise we would have taken the other instruments also of raising finances by the SMEs, which are also very equally important, because they also fulfill a lot of requirement of the MSMEs as far as finance is concerned. But we'll restrict our discussion today on the credit flow and the new approaches, the new instruments, the new tools, in fact, to raise those finances. So I'll stop here, And with this background, I would like to invite my experts, in fact, who are available with us. In fact, first requesting Mr. Akash Jain. Mr. Jain, you are there?
Yeah, Mr. Kumar.
Okay,
Good
okay.
evening.
So let me introduce him. He is the director of Care Ratings Limited, and his domain is corporate ratings, SME ratings, and grading. He has been head of CARE's business development in rest of Maharashtra and Goa, and is responsible for providing tactical inputs to impetus to CARE's business. He was earlier heading South India business SME and corporate ratings for Care Rating. He is a very experienced person. I think we have interacted earlier also, Mr. Jan, if you remember.
Yeah.
Rating is a very important tool which can really help increasing the credit flow. I remember we had introduced this rating through NSIC also with the subsidy, 75% subsidy, and that is how SME rating basically grew leaps and bounds in the country. But somewhere on the way, there are some hurdles now in accelerating that rating model. But nevertheless, the importance of rating is not ruled out and is not cannot be undermined. So I would like to invite Mr. Jain to tell us, in fact, what is rating, how does it help the MSMEs, and how, in the current situation, they can take advantage of this MSME rating. And particularly with the introduction of this grading now, what is the difference between rating and grading? Because some banks are asking for only bank loan rating, and whether they accept the grading also, and what should the MSMEs do, basically go for grading or for rating, and how they can leverage, in fact, this rating to increase the credit flow and also negotiate the better terms with the banks. Over to you, Mr. Jain.
Thanks, Dr. Kumar, for brief introduction and setting up the context. I appreciate and in fact made a note of a couple of points which you have mentioned. About MSME, particularly on the funding side, which is feasibility and viability based funding. You have mentioned about the new instrument such as bill discounting. You have also spoken about the cash flow based funding. Just to take a step back on this and just to give a brief introduction from the institution I'm coming from, Care Ratings Limited. Care is almost 3 decades old organization. We commenced our operation in 1993, and we are leading rating agency today. We are very active on the corporate ratings and the ratings for various public and private corporates. Now we are talking about what exactly is happening and what's exactly the problem. I mean, Dr. Kamal will probably agree to me that SME funding has been a talk of the town since last many years now. I mean, in every session, I mean, nobody is ignoring the importance of MSMEs, and then comes the requirement for financing. And historically, there has been problem wherein the gap in SME funding was definitely there. And even as we talk today, the statistics, what Dr. Kumar has just mentioned, a whopping gap of 30 lakh crore in SME financing is humongous. And I'm sure over a period of time, experts like Dr. Kumar and all others who are there in coordinatory, Mr. Sina will give some way out and some suggestion and some inputs how to take this up. So, I mean, what I've seen, which has never changed for SME, is the high cost of funds, the high interest rates, lack of collateral, because it is almost in collateral based funding. It has never been a cash flow based funding. There has been issue with SMEs wherein the flow of information, there has been always a problem. So information asymmetry has been an issue when we talk about particularly SMEs, and hence whosoever is the banking or financial institution, they face difficulty in terms of taking up the proposal. And another point is, the time or the TAT, what the banking institution take for arriving at this decision is relatively very, very high. And SMEs face, big challenge on that. There has been high dependence on the external financial consultants or chartered accountants. And when we talk about SMEs, because SMEs, they don't have any in-house CFOs or financial experts who, because of managing their cost. So that has been another issue when we talk about SMEs and the funding. And lastly, historically, if you look at the NPA levels in SME sector has been predominantly very, very high. So these were the certain factors, as per my understanding, and whatever the statistics what we see. These are the some issues why SME financing is weak, or the requirement versus the actual numbers. There has been a gap. Now, as we speak and look forward, a couple of points which Dr. Kumar has mentioned. I mean, feasibility and viability based funding. So when we talk about feasibility and viability based funding, yes, now banks and NBFCs and various financial institutions, as we talk here, moving towards viability based funding. And for that, generally, instead of SME rating earlier, which we used to do for SMEs, now bankers are asking for techno-economic viability reports. So that has been another new framework which has been designed by various public and private financial institutions, wherein the bankers now ask for techno-economic viability report. Based on the viability report what we provide, the banks take a decision on go or no go. So precisely, I mean, that's not the only one deciding factor when it comes to SME financing, but yes, that is one of the major requirement when we talk about SME financing. Another point which Dr. Kumar has mentioned about bill discounting or cash flow based funding. So when we talk about bill discounting or cash flow based funding, there has been a new aged startups or fintechs today, which are very, very active in SME space, who are trying to bridge the gap in SME financing. And I see, a good amount of funding requirement which is there in SME sector are being fulfilled by all these new age startups and the fintechs. Um, Lastly, I mean, when we lastly, as we are talking about the difference between ratings and the gradings, and which is more useful. So, Dr. Kumar, I mean, just to keep the context. I mean, now as we talk, I mean, at large, most of the rating agencies are either discontinued or slowed down on SME rating space. I mean, when we talk about SME rating, I mean the SME rating which we used to do erstwhile, on the scale of SME 1 to SME 8. SME 1 being the highest, SME 8 being the lowest. So at large, I mean, we have slowed down doing any assignment on SME ratings because of couple of reasons. Because earlier, when there was a huge requirement coming in from the banking side for SME ratings, now gradually, instead of SME ratings, banks have migrated towards bank loan ratings. So bank loan ratings, again, the scale is starting at the top rating is called as AAA, and the lowest is called as D. D is precisely a default if there is any default. So you'll get a D rating, and if your rating is D best, so probably you'll get a AAA rating. So I mean, that's how the rating scale has been shaped up. So I mean, what I can say is, I mean, gradually SMEs also need to graduate towards bank loan rating sooner the better. SME rating, of course, has been there since earlier. I mean, for SMEs particularly, but now as I speak, I mean, across the board, all the public financial institution or NBFCs now most of them are asking for the bank loan ratings when we talk about SMEs also. So two things. One, the TV, which is a pre-requirement by any of the financial institution or the bankers, and post the disbursement or during the disbursement, you will have the requirement for the bank loan rating. So these are the two prominent things which have now come up as we talk, and I believe this will continue going forward. Thank you.
Thank you, Mr. Jain. Thank you very much. I think it was a very good presentation. In fact, I would still be interested to know as to how the ratings can be leveraged by MSMEs to have the faster access to the credit flow. But
Sure.
we will discuss this in a little while from now.
Sure, no problem.
Dr. Sinha is waiting. In fact, sorry, Dr. Sinha. Welcome to this show. In fact, it's pleasure having you here. And let me introduce Dr. Sinha. In fact, he has been a very seasoned banker in past with a lot of experience of working with State Bank of India, and as business head of SME at SBI's Mumbai circle. It's I think the biggest circle probably of the SBI as far as SME is concerned. He spearheaded the largest portfolio amongst all circles. So that is the kind of experience that Dr. Sinha has. And he is presently founder of MSMEadvisor.com. And is an enterprising leader and planner with 30 plus years of extensive experience with State Bank Group, including top executive assignments in the SME and industry studies. And highly qualified, of course. I was reading these qualifications, holds PhD in business administration, postgraduate diploma in management, international management, CIIB, CIF, AMFI, a lot of qualifications and credits. I think very deserving and very highly qualified person to deliberate on these issues with a lot of practical experience. So over to you, Dr. Sinha.
Thank you.
Yeah.
Thank you, Dr. Kumar, for nice words you spoken about me. Little bit I will speak about whatever Dr. Kumar has said. The MSMEadvisor.com previous year, especially in COVID, how I thought that a lot of disconnect was there, fiscal movement restricted. So I came forward to put my experiences, the knowledge, the information, whatever products, services, MSME related, at a single point. And I also keep on putting my blogs for information and benefit for the MSMEs at the large. Professor and Chairperson Center of Excellence in Banking at the DSET School of Management, the 6th ASCSB accredited B School of the country, and the leading B School in the South India. Here I conceptualize and execute MSME financing course first time by any B School in the country, and successfully it has been done for the 3 batch of the students. Now coming to the subject matter, which is quite important from Indian perspective for growth of Indian economy, for our high GDP. Now, the government of India in COVID took timely measures in a very difficult phase for MSMEs, especially the micro enterprises. They had a very difficult time. The Union Budget 2022 further came out with a fresh hope for revival and sustainability of MSMEs, especially the measures emphasizing inclusive finance, digital transformation, and sustainability. Amongst the various initiatives for MSMEs, one key highlight was the budgetary allocation for MSMEs which went up to rupees 21,422 crores from 15,699 crores, so up by about 27%. Similarly, the Prime Minister Employment Generation Program saw a significant allocation up by 29% from 12,500 crore to 17,600 crores. The government initiatives which have been, I see a very positive development and encouraging kind of atmosphere build up. And going forward, the 25 years Amrit Kal blueprint to steer economy over next 25 years, a lot of opportunities for MSMEs and industries will be there, as the government has especially the integrated approach to developing modern airways, roadways, railways, waterways. So this will have a lot of ripple effects overall in various sectors. The fact remains that on the record of MSME Finance, MSME Ministry, 6.33 crores MSMEs in the country, and majority of them, more than 90%, are micro enterprises. Micro and small comprises more than 95%. Now, there have been challenge of credit gap, especially for the micro enterprises. And the data which Dr. Kumar was sharing, IFC, that 30 lakh crore credit gap is there, which is certainly substantial. And the RBI expert committee in 2019 to pinpoint the reasons for the credit gap found three key aspects, which I will be covering subsequently how to address them. It was that risk, the lenders feel that yes, giving credit to MSMEs, especially micro enterprises, which do not have their bookkeeping properly, the education, the knowledge part is not up to the mark, remains a challenge and risky. Then high expense of supplying, reaching out, say in the rural areas, semi-urban areas, to the micro enterprises. That's also quite an important aspect. Then the third one, the inadequate presence of lenders in semi-urban and rural regions, especially going down below tier 4, tier 3, tier 2 centers. Now, in this perspective, I will be talking first say a little bit about new ways, instruments beyond banking finance. Little bit I will touch upon. Securitization of trade credit, it's a very good opportunity if secondary market of securitization gets developed, because here MSME credit could be packaged in the form of loan pools or securitized assets and sold to investors interested in such an asset loans. Then factoring to tackle delayed realization of receivables. This remains one of the major challenging aspects which affects the operating cycle of the MSMEs. Considerable delay in settlement of dues. So factoring services, yes, it has come up. Banks have their subsidiary factory services offering, and it is a preferred route where whatever the client sell invoice is there, say 80 to 90% of that invoice value immediately factor provides. Then the angel funds and venture capital funds. Here, the venture capital, an enterprise looks for the venture capital to expand or break into new markets and grow faster. Angel investors, as we know, that typically invest their own funds, unlike venture capitalists who manage the pooled money of others in a professionally managed fund. Then private equity funding is another source. Well, these are focused on funding a company in the early stages. And the PE investors, private equity investors not only bring capital, but also expertise and experience. That's a great advantage. But again, the challenge is that it's not available to all. It should appeal to the private equity fund for taking such a call for a particular MSME startups. Mezzanine financing, yes, normally the business owners prefer that, yes, the finance should come, but they should retain the control of their business and not give up valuable equity. So mezzanine financing here could be a source of funding, and it's something like between the debt and equity. So mezzanine finance is a structured debt like instrument earning high yields, and this could be a recourse for the MSMEs. Now, reaching out to the stock market, well, it is possible only after certain stage when the unit has come out, not for all, but yes, 2012 onwards, both BSE and NSE launched their SME exchange platforms to enable MSMEs to raise funds and get listed as public entities. So that has been a good initiative in the past. At the same time, I would mention here that beyond whatever I have talked, those are also, I will put it in the nascent, in the developing stage in our country. But there are other products, services, which in my experiences, not all MSMEs, especially micro enterprises, they are aware and they are taking advantage of that. So I will share about this. Credit-linked capital subsidy scheme. In fact, this one scheme where awareness is not there amongst MSMEs, and then they are going for improved technology. And there are 51 subsectors identified by Government of India. Here, 15% of say 1 crore finance is there, so 15% subsidy they can have it, and they can apply through primary lending institutions. So here I had my practical observations that this information was lacking amongst micro, small, and medium enterprises largely. Then the credit fund, which Dr. Kumar was also mentioning, CGTMSE as we call. So here up to rupees 2 crore, yes, it's an opportunity without any collateral to get funds from bank. And as a banker, I have been there, so finding that yes, the seriousness is there in the promoters, it's a viable proposition. So we have gone forward for extending loan, and since there is a guarantee coverage available, so banks feel comfortable. Again, the MSMEs should reach out to the banks for getting facility under lending facility under this scheme. Then Prime Minister Employment Generation Program also, which I talked that the outlay has been increased substantially. Here, yes, the project cost 25 lakhs for manufacturing and 10 lakhs for services sector. Again, it is important for the micro enterprises especially. And depending on the different categories, subsidy component is available, online application can be filed. So the awareness has to be there. Again, Pradhan Mantri Mudra Yojana, which is started in 2015, again, online applications can be done, and up to rupees 10 lakhs collateral free, without any collateral, the loans can be taken here. So these are the schemes. In fact, all the details of this on msmeadvisor.com I have put in details, and the source link has been provided. So these awareness certainly, I'm sure, will be helpful for MSMEs to take advantage. Now, talking of, Dr. Kumar was mentioning that given such a scenario where there is such a big gap available and there are constraints in the system, now the model which to me it looks that can be very successful and has started taking off. It is co-lending model where there is a partnership between the digital NBFCs and the banks, and the NBFCs have the advantage of accessibility, processing with speed, and the banks have the advantage of the balance sheet size and the scalability. So this way, the reach out of MSMEs which are there in tier 3, tier 4, and smaller population areas, sectors, it's possible through such NBFCs. Cheaper cost of onboarding relatively is there because banks cannot have brick and mortar kind of a setup at smaller places. They have their own constraints, capital constraints. So the NBFCs which work on data-driven credit algorithm, which is say based on DST, PAN card details, and all, since the solutions like video KYC, e-signature, video sign have improved access. So here, this partnership or a symbiotic relationship between NBFCs and banks can really be very effective. And in the recent past, I have seen that such kind of collaborations have been coming forth. For instance, Ugrow Capital, they have tie-ups with 18 such partnerships, even bank like State Bank of India, bank like Bank of Baroda, even Edelweiss Finance also, I learned that they have also tie-up with public sector banks. So this I look forward as a very important model in the time to come forward to play its role. Now, Dr. Kumar and Ms. Akash was talking about also new practices, funding practices. Earlier, the focus had been there, say, in the 20th century, in the 80s, 90s, the collateral security used to be looked upon. But the past experiences show that these collateral securities are the last recourse for the bankers. Bankers do not initially need all this. What they require, that whatever the lending has been there, the timely repayment of the principal and the installment, the servicing should be done. So for that purpose, what is important is the cash flow based lending, and the banks have started giving focus, especially in 21st century, and they look at the cash flow on the bank statement, current account statement of MSMEs, that how the fund credits, debits are there, and based upon that, they are taking call also for sanctioning limits. So apart from this bank statement, as I said, that the fund flow, cash flow, that remains a very vital, important criteria for ensuring the health, that it is a standard assets, and that is what matters for the banks. The collaterals are the extreme situations when loan has gone bad and the last recourse for recovery. Then trade receivable discounting system, this concept which was started by RBI in 2014. But yes, it had been moving with a slow pace. It has on its platforms sellers, buyers, and financials as the participants. And MSMEs are the customers. Now, here, for all the units and public sector enterprises with turnover of 500 crores and above, the guidance has been there that they should register on this trades platform, but still not all are registered. But nonetheless, it's moving with an increasing positive sign, because from 2017 to 2021, trades discounted invoices worth rupees 37,000 crores. And in 2021-22, whatever it was done in the last previous 4 years, little more than that, 38,000 crore invoices were discounted in 21-22. And now it is targeted that FY23 there will be 75,000 crore such a discounting. So it's a good sign, and it's very much required for helping out MSMEs. Then a digital lending platform, which Dr. Kumar mentioned, 59 minutes loan. Yeah, the concept is very good, but at the same time, the challenge has been there that yes, in principle approval is there, but bankers subsequently they go on their own way for appraisal. But nonetheless, here also the pickup number is there, whatever sanctioning, and then the disbursement, final sanction and disbursement, that percentage is going.
Sinha, can I stop you here for a while?
Yeah, sure.
Looking at in the interest of time, I would just stop you for a while, because there are so many things that you have covered in your address that I am really getting impatient to ask some specific things from you as well as Mr. Jain. Particularly 4 things which I noted. The first one is, you said lack of awareness about the schemes and the banks, guidelines. So my first point is, how do we create awareness, more and more awareness, and inform the people about the schemes through which they can have better access to credit? That is my first question. If we can be briefly, covering very short, then I can have maybe covered more questions which can benefit the people.
Yeah, sure. Very important.
The first is awareness. How do we create awareness? Because for 50 years, we have not been able to create awareness, and the gap
MSME Ministry, Dr. Kumar, has MSME development institutes at important centers in the country. And their role is developmental role. Now, my suggestion would be that they should play active role in licensing with the MSMEs associations, industry associations, wherever they are located, and periodically they should conduct in participation of the banks there, lead banks there, SME heads there, and sharing knowledge on various schemes, government schemes.
No, Dr. Sinha,
Yeah,
there is a little difference what I am saying. We are not talking of awareness about government schemes. We are talking about awareness as to how bank lending, credit flow from the banks can improve. So how do we create awareness? Because banks are not coming forward. People still do not know what is mudra, what is credit guarantee, it's all in the bank's domain.
Agreed. But somewhere somebody has to reach out. Again, banks to banks, circles to circles, journal offices to journal offices, people to people, who is heading. The approach differs, the reach out, meeting out, number of meetings, the ground level taking place.
Actually, banks are not coming forward. I have seen recently, private banks are still active, and they reach out to industries and associations and clusters. But nationalized banks, though, they are absolutely not reaching out. And if you ask them, then as you mentioned yourself, that the transaction cost of financing the small industry is high, so they don't prefer. So this problem continues. And the problem of that 2 crores collateral free lending, that also continues. So how do we bridge this? Can you have some practical suggestions so that we can really advise our industry friends that, okay, this is the method you go and talk to them?
Again, as far as Reserve Bank of India has its target that 7.5% of the lending should go to the micro enterprises. Now the target is there. For achieving the target, obviously at the ground level, efforts has to be done by all the banks. Now for that, somebody has to monitor at the top level how the interactions have been going, how many number of meetings have been going, which associations, which industry association, which MSME clusters, the meetings are taking place. So somebody has to drive it at the top level.
Okay. So my another point was that this the point that you mentioned about bookkeeping problem. The banks are saying that the bookkeeping is not adequate. So I would say that the banks are looking for good customers because it is their business. Their business is basically banking, and banking is nothing but deposits and lending. So I fail to understand. I have been a former banker basically. I fail to understand why don't they encourage and advise the clients who are good clients working very well and help them, or partner with them to prepare their proposals and documentation and financial statements or bookkeeping, as you mentioned, elementary bookkeeping to sab karte hain, but the kind of financial statements that banks need, in fact, why don't they partner with the industry and help them and facilitate?
Yeah, here, yes, I take your point. What happens that micro enterprises level practically, say, post demonetization, the transactions through account, obviously it started picking up. Now the cash intensity is much more than going through the accounts. And unless it is captured in the account, reflecting it, and say, even if some micro enterprises say that my turnover is 50 lakhs, but in the accounts, the transactions have been routed only 5 lakhs. Now, how to verify it? Now that becomes a challenge. So obviously, I know that I have since worked in all population groups, rural, semi-urban also. There, we were telling that yes, unless you route it in the account, you credit it in the account. Whatever say cash receive, you credit in the account, so it gets reflected. Tomorrow it will be an evidence of your turnover. So that kind of yes, knowledge sharing, guiding, obviously, I think it has to go in tandem by the bank's officials. If they feel that here is a genuine person who want to really work, who really is sustaining business, him out so that a proper record gets reflected. So here, obviously, the guidance, it helps out, certainly. And I had the experiences of that way.
Yes. No, I think you have very aptly covered. In fact, the problems are well known to the industry, to the MSME sector and the entire government also. The banks also have certain limitations. I would appreciate what you are saying, that they cannot, after all, they are protecting the depositors' money, so they have to be careful. But the only problem is that bridging the gap. You see, it is not that the banks are not willing to finance to the deserving people, but those deserving people are not able to project themselves and they are not able to reach out. उनको पता नहीं है कि कहाँ पे जाना है, कैसे जाना है. अब co-lending की आपने बात की. Co-lending में people आज तक they don't know how many years have passed as far as co-lending policy came. People don't know whether to go to NBFC or to banks, and who will initiate the co-lending proposal. It's so difficult. So these are some practical difficulties. I am reading one comment from ex-GM Sidvi, Mr. Ramanan. He's saying that as Mudra coordinator for Tamil Nadu, I experienced total unwillingness by banks quoting increasing NPA. So Mudra mein to, this is the kind of experience we are getting from others also. So if you can advise कि अगर किसी को मुद्रा लोन अप्लाई करना है तो कैसे करेगा? आपने बताया कि ऑनलाइन करना पड़ेगा.
Yes, there is a Mudra portal is there. So online the application can be done. The details can be put forth there. And the banks, any banks dealing in the area can reach out and take up the proposal and process it.
If they don't
and
take up
commission
them,
it.
if they don't take up of their own,
Yeah,
banks,
then
what do we do?
the borrower should also reach out nearby banker wherever he is located.
Physically.
Yeah. Yeah.
So after filing the application online, they should physically also reach out in
Yeah.
case the proposal is not picked up online by any bank.
Yeah.
Is that so?
Yeah.
Okay. And then they can, of course, talk to them and maybe convince
Yeah.
them of their project.
Yeah, they can convince.
Yes,
That,
they can convince.
yeah, I am a genuine borrower. I want to do business. I have these skill sets.
Okay.
I am willing to do business. Yeah.
Very good, very useful insight. Although we have a lot of queries from our participants, I'll come to them later maybe. But before that, I'll go back to Mr. Jain again. Akash, you are there with us?
Yes, sir.
Okay.
I'm there.
So please let me know one particular query. कि बैंक लोन रेटिंग की what is the requirement of the banks? Specifically कितने amount के लिए बैंक लोन रेटिंग compulsory है? और बैंक लोन रेटिंग मतलब अगर नहीं कराते तो क्या लोन मिलेगा ही नहीं?
Very good question, sir. So, see, I mean, bank loan rating is designed in such a way that whatever the rating we assign to the client, based on that, bank assigns the risk weight on that particular account. So, in case if the rating is on triple B band, then the risk weight to the account would be 100%. If it is on A, then it would be 50%. If it is on double A band, then the rating, then the risk weight would be 30%. And if it is a triple rated account, then the risk weight would be 20%. Now, what does it mean and how does it help? So it precisely helps, I mean, the banks to for calculating the capital adequacy. So based on the higher the rating, the lower the risk. The lower the risk, the lower the requirement of the capital on the account. The lower the requirement of capital on the account, the client has the opportunity to negotiate with the bank on the rate of interest, on the processing fees, and say the rating is come better. There would be many bankers and the financial institution will be running for that account to have them on their portfolio. Now, coming to your second part of this question, I mean, what is the requirement? What is the mandatory requirement by the bank? So, banks to banks, it varies. I mean, there are certain banks who require the bank loan rating compulsory for 5 crores and above. Citi is also now asking for the bank loan rating, I guess, above 25 crores. SBI asked about 50 crores, Bank of Baroda asked about 25 crores. So, I mean, depends on banks and depends on their capital arrangement, how well they are capitalized. So, basing to that, I mean, from 5 crores to 50 crores, depends on banks, the rating would be applicable. But another contrary to this, there is another point which I mentioned.
I think you are disconnected, Mr. Jain. So
I'm there. I am there. I'm there.
Please carry on. Yes.
So I was just saying, last point is similar to this. We have issuer rating also, which is been done for a corporate or for SMEs. In fact, I mean, wherein we assess the entire cash flows and entire business model. The rating scale remains the same from AAA to D, and we assign the rating. So generally, the large corporate and mid-sized companies, they come forward with availing any sort of loan. So whenever they for any sort of they avail they use your rating and they negotiate with the bank on pricing, and later they come for the bank loan rating. So same at large.
Okay. So I think we have plenty of things, in fact, to discuss. The whole problem is that this gap and the awareness and the trust and matchmaking between the seekers of the credit and the suppliers of the credit, these are crucial factors which in fact have to be addressed. And I would say that through these new instruments, of course, new instruments are welcome, but the problem is it is not the instruments which are important. It is the connectivity with the bank which is important. Once the bank or the financing institution takes up your proposal, they will go through any instruments that you may like. You may like bank guarantee, you may like cash credit, you may like term loan, you may like. So that will happen. But the problem is initial contact, the first contact, and getting the bank to approve your first proposal. That is the challenge. I think gradually, as Dr. Sinha also mentioned, that gradually more and more awareness is being created through monitoring, through, when we talk to the ministry that these are the problems, they say that you apply to the bank. Any person who is needing credit proposal for any amount should apply to the bank, complete the documentation, and if they are not sanctioned, they should report. And you as association bring out those cases to us so that we can write to them. So I would suggest that anybody who is facing difficulty or who is needing the credit, additional credit or new credit, whether under Mudra or CGTMSC or any other scheme, you should apply first. Instead of saying कि मैं किसको बात करूं, you should nearby bank, as Dr. Sinha also suggested, that just by making an application online may not help. You have to go personally and talk to them and apply. They will say nahi kal aana, parso aana, but even then you should apply. Download the form and make a formal application along with your project and along with your covering letter. You will receive some communication. And talk to the branch head or the regional head or the zonal head, and at least some activity will start. And if you don't get justice, you don't get sanction, you don't get communication, at least you can report at the higher level. And you can report even such cases to Power to SME's website also. And to some extent, we can also take up those cases, in fact, wherever it is possible.
Dr. Kumar, one point relating to rating,
Yes.
I would like to share
Please,
that one instance, my experience of a borrower who was dealing for the last 2 decades, very good track record. And he was rated well also. So as you know, that better the rating, competitive or better the interest rate will be there. So he was happy, but I came across when he later on he approached that, sir, the branch is charging high rate of interest. We are a very good borrower for the last 2 decades. So as a business head, I went to the borrower place. Now through interactions, I came to know that his rating was very good for the previous year. But for the year, just immediately, his rating had come down. Why? The fact came that he had given projections, and the projections were achieved only up to 40%. Now the banks take into cognizance for the lending requirement the project itself. And when the project itself is not met, obviously the various financial parameters based on which it goes in the credit risk model, the rating certainly will come down. And that is what happened. Surely. He said, sir, my finance head had been very optimistic. He gave such projections. I said, you should understand that what is the implication of it. Based on that, bank had given you excess money, but you did not use it. Obviously, RBI has certain guidances to the banks.
Okay. No, I agree. I understand what you're saying. There should not be any difference.
Yeah, borrowers should understand it will improve their rating if whatever projections they are giving are realistic and they are achievable.
Yes, surely. So in the interest of time, I would like to go back to now some of the observations and questions which our participants have raised. Because we have exceeded time, so let me quickly go through. Mr. Pankaj Arora writes that I am not sure if it is so much about awareness, rather it is about disconnect between the institutions. Yes, surely I agree. It is to some extent awareness also, but disconnect is more relevant here, because as I said that by between the borrower and the bank, in fact, it is basically the trust or the first contact which becomes all the important thing. Now, Mr. Minal Shah writes, even banks are not ready to extend CGTMSE. Very true, because they feel that probably CGTMSE is a partial guarantee and not a full guarantee, and collateral security will be much better for them. They are very reluctant. We have faced a lot of problems dealing with banks, private or national. None are ready to for CGTMSE. I think it's partially correct, but some of them are, accepting also. But there is general, feedback that CGTMSE is not welcomed by the bank. Now, Pankaj Arora writes, Mr. Pankaj Arora, the political agency is happy making tall announcements, while the executing agency, which is banks, they are happy within their cave and cohorts. Now, to some extent, it is okay, because political intentions are not bad. In fact, they try whatever through policies and through directives, but execution, as you say, becomes a little tardy and difficult. And wherever I say that you are not able to get the assistance because of the pressure of work also, sometimes, the banks are also overloaded because of the pressure. They decide about the priorities. You may not be able to get attention, but if you draw their attention right and take up the matter with their senior people or to the government, the work is done. Then Mr. Manohar Shetty writes, PSB's attitude is certainly not encouraging. And Mr. Ramanan, of course, as I mentioned earlier, Mr. Pankaj Arora, encouraging. I am afraid with their conservative mindset and often judgmental towards the youth and small business owners. Now, I think it is the risk versus incentives for bankers. The personal liabilities are high, Mr. Arora only writes, and incentives are low for bankers, especially in public sector banks. That is at the core of all this, and it most definitely an interesting problem to work upon. Yes, fully. I think these are some of the observations which are so important and relevant. I think everyone, Mr. Mistry, K. Mistry writes, everyone have to be educated with the banking norms in terms of account of operation, availing the loan and security norms. Yes, this is again awareness and education. Then Mr. Rajendra Kumar Singh, Mr. Mani and Mr. Neerav, I will try to respond. This is basically your response. So these are some of the observations which have been given by our participants. I would say that basically, Mr. Mani I am Mani TT from Havas Sarala, Bangalore. We came out of NPA during June 22 by OTS with SBI, UBI and IOB. Serving nuclear power and space sectors, we need around rupees 15 crore of bank guarantees limits. Where can I get that? We are 37 years old company having around 80 crores revenue. And see, since you have can Dr. Sinha respond to this question? He says that they have come out of NPA.
Yes. Here,
by OTS with SBI.
Yeah, one-time settlement has been mentioned with the State Bank of India, Union Bank, and Indian Overseas Bank. They are experienced in this line. That is what is reflected, and have a turnover also 80 crores. Now they are looking for 50 crore bank guarantee. Now, one fact which has been there, and they also should note that yes, their account was in the past NPA. So looking to the past, these banks, 3 banks, obviously would like that this contingent liability of 15 crores, which if extended to you, should not become contingent liability. And you should be in a position to successfully execute the task for which you are expecting the bank guarantee. So that kind of confidence building, first you have to give to the bankers that the chances, the scope for crystallization or this non-fund-based liability becoming a fund-based liability, it will not be there. So the details of the terms and conditions and other things obviously would require a knowledge before really making, a specific pointer
So Dr.
for
Sinha,
solution. Yeah.
Dr. Sinha, his point is, where should he approach? To State Bank of India or to some other bank?
Obviously, he can approach with all these three banks.
To
But
which bank?
SBI, UBI, and IOB,
Okay.
where
Any
he
of
had
these banks where he has done OTS.
where he had relations,
Okay.
and he should satisfy that the bank guarantee, which is now being sought 15 crores, the concern of the bankers will be that this should also not become a liability for them.
No, that of course he has to satisfy.
So that
That the bankers will
satisfaction.
know, those details have to be told to him.
Yeah.
It is not that he is asking how should he apply and where should he apply.
Yeah, to these banks can be applied, because if he goes to any other bank, his record is NPA. So they, as a new borrower, they may not
consider. They may
comfortable
Yes.
in entertaining. But since Mr. Mani has a dealing with these banks already, so there
Yes.
is a track record. Maybe for certain regions, this account would have become NPA. If the bankers are satisfied, SBI or UBI or IOB, that yes, this 15 crore bank guarantee for the purpose which is sought, they are fully justified, and there is not likelihood in all practicalness for becoming it as a liability.
Okay. Zumair, do we have other questions? If you can read out, if there
No,
is.
sir, you have covered all the things submitted by the participants. I think that is it.
I think there is one from Mr. Neerav Jha.
Neerav Jha, right.
I am Neerav Jha. We are a manufacturer of process piping systems and valve. Market is very good of this product, but I am short of working capital. Bank funding is limited as per the looking for an investor to 3 to 5 crore for more details. Dr. Sinha, will you like to say, or Mr. Jain?
Yeah, here debt financing, yeah, obviously bankers have certain criteria, like leveraging of it. Obviously, they will be looking at certain financial ratios like debt equity ratio or the current ratio. And if certain limitations is as per them, that up to what extent they can fund. So that is coming. So for the remaining gap amount, he has to look outside. So in outside, again, how old it is, what kind of his business is, whether he can attract from private equity, angel investor, those sort. So whether his business plan has some unique aspects of its own. All these things would matter if he is looking beyond the banks, going for getting certain participation in equity.
Thank you. So I think we have covered most of the issues raised by our participants, and to whatever extent possible, given in fact some inputs how the credit gap can be, reduced to some extent by adopting new approaches and new tools, ratings, and through various other instruments which are available now for financing. I hope the participants would have got some clue of this. But anyway, if there is any further query or any more information required, we all are available. You can write on the website also, and you can write to Power to SME also, or even directly to our distinguished guests, Dr. Sinha and Mr. Jain, who will be, of course, pleased to address your concerns. So thank you very much. Over to you, Mr. Zubair.
Yeah, thank you,
Dr. Kumar. Thank you, Dr. Sinha. Thank you, Mr. Akash. I thank all the participants for having such active participation and interacting with our speakers. And I hope the session must have given a very inside details of what exactly the topic was supposed to cover as a discussion domain. And with these words, I would like to now conclude this session, and I hope to see you all again in our next session. We will be planning it soon. So thank you again to all the speakers and participants. Thank you.
Thank you. Thank you very much.
Thank you everyone. Thank you.
Thanks.